Good morning.
Good morning. Good morning. At the stage. Where am I? There I am. Hi, everybody. Hi.
Hey, guys.
So
easily the best looking panel you've had all day, Boris, just so you know.
Definitely the best looking channel I have all day, especially with Chai Girl here, of course. Hi, guys. I tell you, I've been so looking forward to this particular panel. Every panelist has been awesome, but these guys are especially cool because, for those of you guys who remember the great old trading stories when people, when men were men and women were women, when everybody used to trade in the pits and markets were actually face to face and human being to human being, and people used to punch each other and jostle each other. Well, the coolest part about this panel is that every one of the people that you see in front here has actually been on the floor, has I'm sure gotten punched and punched back, including Chai Girl, and has probably some really interesting ideas to talk about. So without much ado, let me introduce everybody around the room here, starting with the top. On top is Anthony Crudele, who is a man who needs no introduction. He runs a lot of things these days. He's sort of like a content media machine, but he runs Futures Radios. His YouTube channel at Anthony Crudele, an absolute must stop for lots and lots of great trading content. A lot of traders. He's got a podcast. He watches everybody. He really, the great thing about when Anthony interviews people is because he's a trader, he really asks the right questions about what trading is all about, what people are thinking about. So Deli, welcome. Great to have you aboard. And then of course below we have Tracy Shuchart, who we're going to definitely talk about energy with and metals with, because she's one of the preeminent sources and preeminent voices on energy. Tracy these days is works for a family office for Hightower Associates and does a lot of analysis, and actually works with the other panelist over here, Jimmy Jude, known as the Merc Jerk, which he likes to call himself, who is one of the funniest voices on Twitter you will ever see, who will just go toe-to-toe with anybody, no matter how big they are, and tell them to go F themselves if he thinks that they're wrong. And of course, he's got a ton of stories to tell us. Welcome, everybody. Love to have you aboard. Say hi to me, and I'm going to just roll our question boards. Just 1 second. Just give me 1 second, and I'm going to, get our questions going, and we'll start the conversation because it's so much fun to have you guys.
I can't believe all three of us showed up, by the way.
I
for 9 o'clock in the morning on a Saturday. Are you crazy?
I must say, when I saw around 8:50 and only Jimmy was in the room, I'm like, oh, I better start vamping. But no.
Tony had to wake up at 6 a.m. just to do the hair. Are you kidding me?
There's a lot of prep that goes into this, Jimmy. There's a lot of prep,
shit.
baby.
Oh my goodness. No, it's awesome to have you guys. So hi Tracy. There, the guys are talking over you, but I know you're mighty but strong. You're like my daughter. You may be small, but she's mighty. It should be your motto, right?
Right.
Anyways, guys, good to have you with us. I'm going to just dive in because I got to tell you, there's so much to talk about. I thought, I'd have all this, leisurely time. We're just going to dive in. Forget the introductions. Everybody knows who everybody is. Let's talk trading because this is what really it's all about. So my first question to everybody is chase versus retrace. What I mean by that is, are you a breakout trader or are you a buy the retrace trader? I'm fascinated to know the mentality of each one of you. Both on maybe on a short-term basis, and don't tell me it depends. If it does depend, then tell me what it depends on and how you would trade it. But I'm going to go to Deli first. Are you a chase trader or are you a retrace trader when it comes to trading?
First off, I feel like I'm in a game show right now, don't you, Jimmy? Looking at this, you and Shai, I'm looking at this going chase versus retrace. I'm like, am I going to answer this question right here? So for me, I am always retrace.
Okay.
No, I know. I'm just messing around.
Okay.
For me, I'm always retrace. I wish I was chase because in this market, it feels like chase is getting paid a lot more than retrace, and retrace is a lot harder. Right. But I'm really built for a mean reversion trade, and I'm built for trying to go back with trend on a mean reversion move.
Right.
But watch that they're paying people for chase versus retrace, but I'm retrace.
Interesting. Definitely a good point. What do you think, Jimmy? Chase.
I'm the exact same way. I'm retrace. And I like, the funny thing is Chai is probably a breakout trader, a lot more. I know she is a lot more than me. I don't know if she does both, and she's shown me this year, I've always been the type of guy, like, don't be afraid to miss the move, wait for the retrace, and you miss the move, you look for the next setup. But I've really seen, especially trading commodities this year with Tracy, that you have to be aggressive in a lot of these moves. You got to jump on them. You gotta buy that breakout, because there isn't a retrace in a lot of these products. They just go, and by the time they do retrace, that the move's over, and it's it's done. Yeah, so I'm adapting, but I've always been a retrace guy, but I'm adapting, and I'm seeing the benefits of adding that more aggressive breakout move to my repertoire just by watching Tracy operate.
Really interesting. So Tracy, Chai girl, tell us, I know why these guys are retraced, but tell us why you're chase. I'm curious. Is it because you're just a better trader than they are? No, I'm kidding.
No. I think it's with, I mainly trade commodities and, equities and commodities. And so, again, a lot of those move breakout. I like to see like a breakout and then a little bit of a retrace of the breakout, then to get back, then to get into the trade. But again, a lot of these moves in commodities, you just kind of have to jump on. Right. And so, and if it does retrace, you can always leave. You don't have to put a full position size on and just go for the gusto every time, right? You can leave some room to add if you do get that retrace that you're looking for.
Interesting. I think this is a really interesting point from like a whole bunch of levels, that if you come from a commodity market, commodities by their very nature are kind of constrained products, right? Like, when there's a shortage, there's just no price high enough that you can pay for it, and when there's a surplus, there's no price low that you can pay for it, right? And I think that type of dynamic naturally creates much stronger breakout markets. Generally, there are periods like in the late '90s when commodities were just in a range-based market, and it killed every breakout trader. But from a equity point of view, I think all of us who have made markets, the thing people don't understand is that market making mentality, you're always selling the offers, you're always buying the bids, whether you're doing it on a scalp basis or even on a longer term basis, because we're always trading against the crowd. It's just how market making is. Market making by its very nature is mean reversion, right? In terms of doing it. And I think because we've just been trained in that methodology for so long, it's very hard for any of us to like just go with momentum. Would you agree, Jimmy and Anthony?
Absolutely. And markets morph too. And right. There are certain times when you want to be more aggressive. You want to that you're in a market where the train is leaving the station, and this might be your only spot on, and then there's times when markets are grinding and choppy and stuff. So it's always a process of morphing to what's in front of me when I trade. I never marry to one thing or the other. I do naturally, I do want to be patient. I do want that perfect spot. I want that retrace, but it's there is no one fit in trading, especially if you're a scalper or a prop trader, you don't leave any stone unturned with your trading. I'm always trying to do trades that make me uncomfortable. Like breakout trades make me uncomfortable. I try to force myself to do them. I try to get, but I realize it's not really my game. So I don't say, I never like say, there's a certain thing I don't do in trading, like that's I would never try that. I'm not that guy or whatever, if it's out there, I'll work on it. I might not be great at it, but I'll work on it.
Right. You'll try sushi once, right? Is what you're saying.
Absolutely.
Anthony, do you agree with me that it's our innate, like, just from being on the floors, that you're naturally forced, you're kind of buying bids, selling offers, that mentality, just, it's hard to break that mentality and buy breakouts all the time? Or have you matured, or do you have like a different perspective on all of this?
Well, the difference is, like, on the floor, if you bought an offer, is because there was bids coming in and you physically could see them doing it, so you had a lean. Right. And I don't feel like I have any edge. I heard you talk about that in the last segment, buying into a rally. I mean, I like the only like kind of like retrace fade chase move that I like is the moves where, I mean, I lost it on Friday, but like when we rip lower in the market because the trend has been higher, I like to fade that breakout lower and try to buy something into weakness for a rally. So it's like, instead of chasing it, I would fade that chase lower. But I just think that, in this market,
you're buying the retrace. You're still fading. You're fading the dip. You're buying a dip because you think it's gone lower. It's hard to break old habits. You are definitely,
I won't buy into it at the rallies. It's funny. It's like, I look at the rallies. I just think it's so hard for me to manage risk. The minute I just feel like I have a weak hand every time. If they start to go my way, it's either I want to take profits immediately, or when it goes against me, I can't hold it.
You're like, oh,
I know that's not structured.
I knew I bought the top. I knew, but I'm the same way.
Exactly.
I
feel that. I feel that all the time.
Yeah. Another topic that I think is near and dear to every trader is stop, no stop. So, I come down obviously on hard stop. I'm a scalper. There's nothing. But what I will do is I'll stop. I'll go again. I'll stop. I'll go again. I'll hit me again. But I will always do it with a stop. How do you approach your trading?
I mean, I don't know how you could trade S&P or NASDAQ without a stop. I mean, I think it's crazy if you are.
Sometimes people will say, well, I'll come in here, and if it comes in, I'll add a little bit more because I heard Tracy talk.
So like a mental stop. I mean, I do that sometimes in the S&P, not really in the NASDAQ, because usually if I put a stop in the NASDAQ, I'm putting it wide enough, and I don't even care if they one tick me because I've been burned too many times not to have it. But that's why a lot of times I've been using options now, just because if I want to be in an area. I've been trading some NASDAQ options lately as well. I like them because I don't have to use a stop. I just bought the trade. And so I can try and make it work. But if I'm trading any sort of future, I mean, the only time I won't have a stop on is if I'm trying to like turn and burn something real quick. And I know that I don't want to basically have a hard stop because it's just too fast for me to do it, which is rare, then I wouldn't put it in. But mentally, I know where it is, and I'm disciplined enough to just burn out of it if I have to. But that's a rarity.
Interesting. Yeah. NASDAQ reminds me of that South Park episode where the guy goes, and it's gone. Like where the guy like gives money, and it's gone. That's like if you don't have a stop in NASDAQ, and it's gone. What about you, Jimmy? Stop or no stop? And I know you coming from an options perspective, and so I'd love to hear your nuanced view on all of this stuff.
And I'm with Tony on this. Options are a great way to have a natural stop in, especially if you're, buying a put spread or buying a call spread, you're defined your risk, what you've laid out, what kind of premium. But when I'm trading futures, I usually put in a stop that's like outside of where I want my stop to be. Just for like that blowout risk that just, something really silly happens. Right. And then I I have my mental stop and I watch the action, because a lot of times it'll be like a timing thing as just as much as a, where the market, is trading. If it lingers too long, if I feel like it's an area that, should be, the market should tap it and go, or, so I do have there is a mental stop. I don't have hard stops. My hard stops are outside my mental stops.
Right.
In order not to get totally yoked on, on a ripper, so
Right.
I'm covered. I'm a stop guy. I'm covered, but
right. So you have an emergency. You have an emergency stop. You have like an emergency stop.
Yeah.
And then I'm just curious, on an intraday, trade, what would be an emergency stop on the S&P? 50 points below, 30 points below?
Probably 15 handles, 10, 15 handles, like
that's not a lot.
No. And you know what though? I'm pretty, like when I come into an area, I know I'm usually pretty accurate. If I'm 10, 15 handles away from where I should be, my thesis is probably wrong. I'm just probably in the wrong area.
Got it. Interesting.
And there's also time. I also have a time stop in my head too. Like if it's not working, I'm with Jimmy. My buffer is always a little bit outside my stop, and so I kind of account for that because I'll probably blow out of it before it gets to my stop if it's not working. But I really do have a time stop. I used to look at a timer. I don't anymore because I've stretched my time horizon out a little bit. But if I get into something and I see that it's just not working or it's like churning against me, then a lot of times I just blow out of it too.
What's a reasonable time stop for you on intraday basis? Let's say on NASDAQ, is it 30 minutes? If it's not working within 30 minutes?
Oh, no. I mean, I'm really only doing 1 to 2 trades a day. So, I mean, if it's not working, I would say I would say in the first, I don't want to say immediately, but it's like, I know if I buy an area, go back to what Jimmy said, if I feel that I'm pretty accurate and it's just not working, like if I buy something, it's just like, all of a sudden it sits there and it's just grinding against me, or it's just whipping around an area and I look at the action, I don't let things play out too long if the initial response is not what I wanted to see. If the initial response is what I want to see, then I'm I'm adding more, or I'm even trimming it. If it's not what I wanted, I might be trimming it off towards my stop. And so there's that as well. Interesting.
Tracy, what about you? Because I know you're obviously trading, I think, a little bit on a longer term basis. How do you handle the issue of stop, no stop?
Yeah, I do handle a kind of a longer term basis than just scalping anymore. But I, again, I use options just like that, particularly with oil, because I just think it's been range bound and it's been a better trade for me to do options on oil lately. But as far as the stop is concerned, I have a mental stop. So where I want to be. But again, I'm swing trading. So
you don't necessarily like
a lot more room.
Swing trading. That means you're like holding for sometimes maybe a week, right? It's not like you're going to get knocked out in a half an hour. Is that what you're saying?
Exactly.
Because you're trading sort of like like longer term moves in oil and gold. Like and I talked about gold. We'll talk a little bit more about it. How you're obviously trading for like the 3,000 level, not for the next $20 level kind of thing. Yeah.
Right.
Okay. Cool. All right. So here's a question I have for you guys. I'm gonna give you my view, which is probably completely opposite. And I know it's definitely opposite of Tony's. Is size a superpower, right? So every time I have lost money is because I started too big, right? I never, it doesn't matter how stupid I am. If I'm small enough, I can't be stupid enough to lose it all. It's sort of like been my lesson. So I start super small lately, like micros sometimes, not sometimes, but a lot of times micros. because part of my approach is that if I'm wrong, I get bigger. Not everybody needs to follow that methodology. People see me trading live every day, and it's enough to give lots of people heart attacks. But the point is that I forget strategy, forget tactics, forget reading the market, forget this. There's a million things that I will get wrong all the time that I cannot control. But the one thing I found that where I have a modicum of power is size. Agree or disagree? Tony first.
It's amazing how much you learn from a one lot. Yeah. You put a one lot on, it changes everything. You are so much more in tune with the market. Because I'm not systematic, I believe that position sizing is everything.
Right. But what's unique about you is you get bigger the more correct you are, right?
Correct.
Which is, that's the right way of trading. I get bigger the more wrong I am, but I'll get into a position. No, because I'm trading mean reversion. I'll stop myself out. It's not like I'm letting the inventory accumulate. The worst thing to do in the world is let bad inventory accumulate. But the point is that it's whether you always want to start probatively and then go forward, right? I don't know, Jimmy, do you agree? I know, Jimmy, you've done huge size. You've been sort of like, you've had trades where you've gone in large at the beginning just because you have strong conviction on the trade, right? So maybe you have a different point of view.
I started right away trading really big, but completely clueless. It was just happened to be my first job, and on the floor, my first trading job was trading for this group that was trading massive, and they were like, "Hey, get in there, you're 1,000 up." And I was like, "All right." I didn't even know what 1,000 up meant. I was just like, when a broker would ask me, I'm like, "Yeah, 1,000 up." It was whatever.
I feel like with you is like taking the 18-year-olds into battle because they're too stupid enough not to run into bullets. It's like that. I feel that's how they
absolutely. It was just like this this math game that I played every day, and with and checked out my high score and stuff,
Right.
But through the years, through talking with a lot of guys and then converting over to electronic, because it was completely different, sizing in the electronic world and determining that, because it was really up to you. You could do whatever you wanted. You weren't on the floor. You were kind of, the brokers could hit you with whatever they wanted, so you were never really in control of your size a lot of the time. But as soon as you got in front of the screen, it was like, the world was your oyster. So,
right.
But a lot of guys, the best traders in the electronic firm that I went to, they all traded really big, and they always traded their size, period. And a lot of these guys were trading 250 S&Ps at a clip. And They would say, and the owner of the company would actually make, if you went up in size and say you got to 50 SPUs or 100 SPUs, he'd say, listen, that's it. You trade 100 SPUs. That's your size. I don't want to see you a 10 lot and a 20. That's it. And the thought process was that you wouldn't just go half-ass into an idea this spot's all right, or you would well, I really want to buy him here, but it seems like it's stalling out. You're not clicking in on 100 SPUs on a tweener like that. You're if you're going full size, you're going, you're waiting for your spot. It's you've got to be positive about the setup. So that's just how I learned, and I kind of took that with me. Now I have fucked around with what I've often found is if I fuck around and start with small size in the morning, I'll trade really well, and then I'll increase my size and I'll get smoked. And then it's now I'm in this weird no man's land of all right, what the fuck do I do next? Do I almost have to shut the computer off and start the next day, and because it's I lose my point of reference at that point if I'm flipping around. Right. Different sizes. So for me, it's big, and that's it. It's one size.
Right.
Yeah.
But here's the caveat that I would say for everybody who's listening. Absolutely, all approaches are legitimate, but there's a key distinction here. when I'm trading small size, it's because I'm doing 100 trades a day. That means I have zero idea if my trade is going to be successful. That's precisely it. I am doing a lot of fuck around trades. That's the whole point. That is why I'm always starting at tiny probative size, because I don't have. There are occasions, maybe there's 3 or 4 times during the day where I have 90% conviction, but most of the time I'm like at 45% conviction. The point is I don't quite know. It's a tilt. What Jimmy's talking about is, if you're going to do size, you better be 90% confident that that is the space you want to be in. This is, size is not for fuck around trades. So that's the key, I think.
And that's also your style too. You trade a lot, you scout, and that's a different style. I don't trade that much. I'll trade maybe a couple times a day.
Right.
Max. Sometimes I won't trade during the day. The opportunity just won't present itself. But I will see, like every day you can scout and you can be in and out of the market, and that's your style. You trade a lot, right?
Right. Yes, I do. Yeah. And that's the whole point, is that every day is lots of tiny little opportunities, but you don't know, where the probabilities are. So you have to do small size. It's kind of like a retail version of high frequency trading, where you're doing small size, lots of bets. Yeah. That's the point, is that you can do both, but you have to understand what you're doing to start with in order to be correct with that. Speaking of understanding what you're doing to start with, Tracy, you said something interesting about size, that you'll take the breakout, and if it comes in a little bit and you still have confidence in the trade, you'll add to the position. Can you talk a little bit about how that process that you deal with?
Yeah, absolutely. I mean, I prefer not to start with a huge size. And again, I totally agree with you. I think micro contracts are great because they allow you a lot more flexibility when you're trading, because you can put more on, and that way that gives you room either to add more or to scale out more.
Right.
So I think micros are great, right, particularly for newer traders, because it just gives you a lot more flexibility as far as your entries and exits are concerned.
Right. And of course, for all of our overseas people who are listening, the beautiful part about CFDs, the great part about trading with our partner Eightcap, is that size is completely dynamic. You could go granular to beyond. Futures have a sort of a minimum size, but CFDs don't. You could literally trade for pennies if you wanted to, and that's I think just a very important point. You don't have to be big all the time to win, and having small size is interesting. So next question I want to talk about a little bit is, especially for discretionary traders. I think everybody on this panel is kind of much more discretionary. Whenever I hear discretionary traders describe their strategy to me, and then when I actually see them trading, it's like two completely different things. My view is that the real edge that most people develop over time is less about their strategy and much more about their technique, right? About what is it that they, what little tricks of the market that they find about price levels or entries or their own personalities that help them adjust and, win more, lose less, or lose smaller, win bigger. Tracy, what do you think about, do you agree that there's a lot of technique rather than just pure strategy in what you do, or at least some technique over the years that you've developed?
Yeah, absolutely. I mean, I think I kind of think they're one and the same, right? Because
strategy is like I'm going to go long when 200 SMA breaks. That's it. Sort of very hard and fast rule that they can be logically encoded. And my point is that a lot of times people say, I'm going to go long, but then it comes below. I'm going to be actually a buyer because it's a dip, not a retrace. And then I'm going to add, there's just lots of nuances that people do around their core idea that isn't really the core idea. That's why a computer cannot replicate a proprietary trader a lot of times, because they're very literal, and human beings are much more nuanced about that. That's the nuance, I think, is in the technique. Would you agree?
Yeah, absolutely. I mean, I think it depends. If I'm trading equities, I have more of, if it breaks this SMA, I'm, going to short it, or,
you're much more systematic.
That's more of a strategy trade. Whereas if I'm trading futures markets, probably more of a technique trade.
Huh. Interesting. So do you think it's because of your own personal breadth of knowledge of the commodities markets, because you've been around, like, everybody is an equity trader in a sense, because we're all shareholders in America in a sense, but like, you've been sort of physically on the floors, you've dealt with this markets, you intimately understand how they move. Do you think that that's where the technique comes in a little bit? You've seen the price action over so many years.
Well, yeah, I mean, that just comes with staring at the screen for years, right?
Yeah.
And knowing kind of how each market trades. I mean, I think each market, each futures market, each product has kind of their own personality, if that makes sense, on how they trade.
Yes, exactly. I think that's something that people totally, like when people say to me, I don't differentiate. You can differentiate between equities. Apple is different from MicroStrategy. I mean, there are human beings behind those tickers that create very, very different dynamics. Do you, Jimmy? Do you agree with that? That there's more technique than meets the eye in a lot of trading that people do.
For sure. And I love like talking to other traders and watching other traders trade to see all the different styles and how they do it. And, I know there's going to be some things that my mind won't be able to do, but I take little pieces from other people's techniques, like successful guys that I've met through the years. And I'm like, wow, look at the way he does that. Look at the way, how he approaches the game. Look at how he, just in the morning, how he goes through all the different information. He's got his, I learn, I never stop learning, and I'm pretty old. I've been doing this for 30 years, but I'm still always seeking that knowledge, even from young dudes that are on Twitter now that, have different styles and then I blended all of the different techniques from all the different, guys that I've met over the years and formed my own way. But you know what? That's really a personal journey, I think.
I think it is. And that's really it. Trading is a personal, and technique is really a personal thing. So, Tony, I trade live virtually every day. And what I was going to say is, there are lots of days where I'm not going to do the same thing. Like, here's my strategy. I always go, here's what we're going to do. We're going to do this. And then I don't do it. Or maybe I do something different because, I see something different in the market and sometimes I can't really articulate, I can't quite articulate because that's where the difference comes in. And then the other thing I was going to ask you, because especially you about this is, for example, last couple of days, right? I'm totally managing this whole, Shink Fest with TraderFest. And I'm trading normal, mini contracts live. I said, we're only trading micros. And I did that because I did not want to trade to go bad and screw me up mentally. Like I really needed to be in a good frame of mind. And I kind of do you think that that's a really important part of trading, that there's no fixed rules. They're just guidelines. And you have to be very flexible around those things.
So a couple things. There's a lot to kind of go back and touch on here. So first of all, I think rules are meant for a strategy. I think when you talk about trading rules, I think you build intuition, like what Jimmy and Shai were talking about. And so for me, I don't look at trading rules as much as I look at trading instincts or intuition. The rules are for my strategy. And so my strategy is pretty systematic. I would say it is systematic, but my technique is discretionary because the market environments change. I saw one of the comments saying, what time frame should we use to determine the exact trend? So for me, it all starts with the daily. So if I think that we're in a bullish environment or a bearish environment or a sideways market environment, that will determine how I execute my strategy. So just because I get a short signal, let's go back to NASDAQ or S&P, in a bull environment, am I going to trade it the same every time? The answer is no, because I'm not going to sell a new high in the S&P or the NASDAQ just because I have a mean reversion indication on a 60, 30-minute or 3-minute chart.
Just
so I might trade
bands, right?
I might trade 3 versus I'll trade a 30 lot if it's a mean reversion back into trend because the primary trend is still bullish and I'd rather be long than short. And so there's that hidden bias as well of like kind of what's going on in the market. And so that's why we go back to position sizing. It matters so much because that's where the technique is made. I've always felt that the best executor of the strategy will supersede any strategy. I mean, you look at every single prop desk out there where they will sit next to somebody and they'll teach them the same exact thing. Why do they have different results along the whole line? Why is everybody not the same? Well, it's not the same because guys in different situation handle things differently. So in the moment, they're able to do what they have to do to get the most out of it or to lose the least amount. And so that's why I will always believe technique is better than strategy. And the final thing I want to say is I totally agree with Jimmy and how there's so many, young people out there and guys like Jimmy and myself. Just because we've been doing this a long time doesn't mean that we know everything, doesn't mean that we're right about what we do. I learn a lot from some people that have been trading for just a couple of years and I see their success and I'm like, wow, that's really cool that they're doing that. And I'm very, I'm happy for them. I root for them and I try to learn something from them as well. So I'm very open to that because I know I don't know everything. And I never claim to, and I think that it's important to have an open mind so my technique can get better.
Yeah, I'll give you one better. When I teach my strategy to people, most of the people in my room trade the strategy better than I do. So, there you go. They have better technique, they have better patience, they have better understanding and nuances of the market. So there you go. It's the same. It's my ideas, but they're doing them better, which is great to see. I love to see that. Another quick question here before we kind of get into some of the other stuff that I want to talk to you because we're running out of time. There's always a battle. There's always a religious battle in the markets: fundamentals versus technicals, right? And news versus charts. And Tracy is, a master, I think, of both, of combining both. I'll throw it to you first. When you are examining a trade, what do you weigh more? The price action or the news flow?
Well, price action, I think it's more important than anything.
Wow.
But
that said, you surprised me with that. Okay.
But because, news could come and, with oil, for example, because it happens all the time, you'll get a headline of some rumor of OPEC and then, the bottom drops out. But if it's mostly a bullish trend, then that's probably going to get bought back up. And I pretty much know a BS headline when I see one at this point. But how I approach a trade in general is I need to have a fundamental basis for that first. So I need the fundamentals behind it. I need, before I even get into a trade, because to me that's just very important. And I'm very macro focused, so I need a story for the trade,
right?
And I need a solid fundamental reason for me to get into a particular market. And then it's about the price action versus news headline, kind of where you really have to be more aware of, because again, there's a lot of headlines that go on.
You have to have some kind of a fundamental orientation. You have to have a fundamental.
Yes, for me to get into a trade, whether if it's I want to get long, platinum, for instance. All right, well, what are the fundamentals behind it, and why should it be a long trade? So that's how I approach the trade to begin with, is from the fundamental side.
Now, let me ask you. This is a very hard thing to do. In the middle of your you start to see lots of data that contradicts your thesis, or some data that contradicts your thesis. How much does it take to shake your faith in a trade? Are you okay at changing your mind? Does price action itself sometimes make you shake your faith? Like what?
Yeah, I mean, you still have to be nimble in markets. I mean, anything could happen. You never know. I mean, there could be attacks in the Red Sea suddenly that you don't know about. I mean, so you always have to be flexible, right? And even if you have a fundamental reason and you are dead set against this trade, if the price action is telling you that this is just wrong, then you're just wrong. The market's telling you you're wrong, no matter what.
sometimes there's no reason, but the price is going against you, and by the time you figure out the reason, it's too late if you haven't taken proactive measures to control it.
Right.
Yeah. Sometimes it's nothing visible. Yeah. What about you guys, Jimmy and Anthony? Like, what do you pivot off news? Do you trade news? Do you use that to help you on your levels? How do you guys generally react? How do you just generally deal with the day-to-day news flow in the markets?
It's a balancing act for me. Sometimes it's always, I would love for the fundamentals. I'd love to get a strong fundamental background behind my thesis and then have the charts confirm and then trade off the technicals, in a perfect world. But I've often seen, price action lead news, and I've often seen like price action be agnostic to news. A great example was, trying to be short COVID when COVID was first starting to break out in January of that year. The market kept rallying, even as it like the layers of COVID was exposing itself.
I remember like in February, market kept rallying before it actually like broke like a dam. I remember I was thinking, I was like, what the hell are they doing? People like, falling like flies. Yeah, I remember that. That's crazy.
Right. So people say like price is perfect, but it's not always,
Right.
So it's a balancing act. I keep an eye on both of them. Andy and I often, we'll have deep debates over, the fundamentals. This is what he's seeing, and I'm not seeing it on the charts yet. And we just had a trade this week where he really wanted to sell stocks, S&Ps, and NASDAQ because of what he was seeing in the back end of the yield curve, heavy bonds, heavy 10-year. They kept making lower lows. His thesis is that the Fed is, starting or could possibly lose control of the back end if they don't, pivot soon. But the charts didn't say, like I was like, well, we can do it. But the charts are not, this looks like a consolidation right now. There's nothing about this price action that's telling me it's going to fall out of bed. Right. Possibly we weren't holding our opening ranges. Little nuances like that were happening within the consolidation. Right. But you know what? He was absolutely right. And his thesis, the price action was actually lagging, but then we saw everything to come to fruition on Friday. So that's what I mean. Like it's a real balancing act. I don't think it's one over the other all the time.
Yeah. No, it's an interesting point. Tony, you're famous for saying that it's not the news, it's how the market reacts to the news that really matters. Can you talk a little bit about that?
You took the words right out of my mouth. The reaction.
I know what you're going to say before you say it.
Mean, going back to what Jimmy said, the whole time I'm watching, the 30-year just get clipped all week long, and I'm watching the NASDAQ just rally 500 points like it's nothing. I'm thinking to myself, oh my God, I want to sell this thing so bad. And then eventually it happens, right? And so timing's everything as well. So, I think it always depends on what the news is and what market you're trading. I mean, news will supersede the charts if it's something that's shocking to the system, if it's something that's news, right? If it's data that's either baked in or anticipated, or you've got a lot of positioning coming into it that will totally skew what the news does. It's a totally different situation, right? I always look at it as like new news will always supersede charts because it's a rebalancing immediately. And so if you're a news trader, that's the times you look at. Where something is just like not really baked in, and that's when it matters more.
Yeah. We're going to have Jason on who's going to talk about positioning. But I remember a quote from one of the most profitable traders for Citibank prop desks, who said, "It's not enough to be right on an idea. Everybody else has to be wrong for the idea to really work." In other words, you could call in, like, this is the point of what Jimmy's making, like. Andy, who's his partner, was right on the idea, and everybody was actually wrong in their price action. And now, like, that trade is really, really working, which is kind of interesting. It's an interesting dynamic of how things work. So I'm going to skip this question because it's a great question, but we just don't have enough time. I wanted to just spend a little time with you guys on crazy pit stories because I know there've been more than a few. Jimmy, of course, is the master raconteur, but just give me a couple of insane stories from the pits that still stay fresh in your mind, either as PTSD or just simply laugh out loud funny.
I was thinking the other day about the fighting, and there was fist fights, and there was rules about the fist fights too. Like if you just went after each other, you were probably looking at like a $10,000 fine. But if you actually exchanged blows and punched each other in the face, it would go up, measurably. But there was also like thousands of cameras on the floor, and they were there for like trade disputes. And there was a room in the back where you would go and like with a broker or something and go and ask for angles of a previous moment, and you could see like what had happened and work out a trade. But after a big fight, there would probably be 100 guys in that little room watching the replay of the fight. And then usually the two guys that fought too were like right in the front watching the fight, and the commentary from everybody, like it was just an amazing scene.
It was like
it was surreal.
I have a story specifically just for that.
Yeah.
So in I would say probably a year after the cameras came to the floor, you used to have, going back to what Jimmy said, you had to have a trade dispute in order to go to the cameras, right? And they made that a rule because people were going there watching stuff, and who knows what they were looking for on the cameras, right? And so you couldn't just go in there without an actual trade dispute. And so I remember one time I'm in the S&P, and the NASDAQ was above us. And so a lot of times you'd hear something going on in the NASDAQ, and you'd look up and you'd be like, okay, like what's happening in there? And, it'd either be a big order or an argument, whatever. But if it got loud there, we would pay attention to it because we would want to know what was going on. Is it an order that's going to spill over to us, or is it just, something that's going on? And one time there was a big roar, and I remember I was just walking outside of the pit, and then you look to the NASDAQ and you had to walk up the steps, and I could just see like everyone kind of like swarming. And I'm like, dude, like what is going on up there, right? And by the time I started walking up there, I couldn't even get up there to see it because there were so many crowds of people.
Wow.
And there was a girl by the name of Elena who sadly recently passed. She was younger than me. And she was beautiful. She was just a fierce, just totally like, she was just a pit girl, right? If you said something to her, she'd tell you to go fuck yourself. You know what I mean? And she was just awesome. I loved her. And somebody called her a bad word, right? A word you don't call a woman.
Right.
So supposedly the story was, and I saw it, I saw the tape. She said, "What'd you say?" And he said like this to her again. And this guy's probably 6'2", and she grabbed him and just popped him 2 or 3 times. And you just see him standing there. And the thing is, she's hammering him right in the face.
Like a maple tree falling over.
Immediately, once we knew that was the story, everyone all of a sudden had a trade dispute, and they had to shut it down that day.
Oh,
fortunately, I was one of the first people in there to be able to see it. But those types of things happen. The rules kind of changed a little bit after that. They weren't letting us in there too easily. Like you only could have 2 people in there at a time. Remember how that was, Jimmy? How eventually they just wouldn't even wouldn't let us in there.
That girl was scary too. I traded next to her in the NASDAQ pit, and I mean, I would have rather fought the guys in that pit than fought that girl. She was fucking crazy.
Her father was a
beautiful
cop.
too, which was the more disturbing part. Was that she'd run you and embarrass you.
Super high heels.
Yeah. Holy shit.
Yeah. It's hard to believe that she's gone. I mean, we've lost so many people over the years from the pit. It's crazy. She died this year.
I've seen it was just the worst human behavior, because it's like, you're in this like pit where brokers it's like throwing, steaks to starving dogs, and like they're going to fight each other over those steaks every day. And, just seeing like I saw a guy rip a guy's toupee off his head, And
Was it Wayne?
apparently-
Was it Wayne? Was it
no,
Wayne they
no.
pulled it off?
there was like a $50,000 bounty.
You
on
remember
him.
how much money that kept going up?
He actually had to hire a clerk to stand next to him to protect his toupee because of the bounty got so high.
He was the biggest Euro-dollar options broker. And I remember when a piece of gum was thrown into his wig.
Into his wig.
I mean,
yeah, and his wigs were like $25,000 a pop. He
I
had
mean,
about
it was
50
big
of the wigs.
wig, man.
Yeah, a giant afro.
I'm going to stop these guys because I know, I mean, they could go forever and it's just so much fun. And Trace, I'm sorry. I know you probably have, unless you have like something really interesting. I want to save your time for actual market calls because I'd love to know what you're doing. But, you were saying a lot of the worst things about the market, but also, Tony just posted something I thought was really good, which is that, there was also big camaraderie on the floor. And by the way, Tony's Twitter feed, Tracy's Twitter feed, Jimmy's Twitter feed are absolute must. You should just put them on there all the time and just follow them. They post amazingly great stuff, all of them, in all sorts of different ways. I thought it was kind of just interesting in terms of all this stuff. But I want to save the last couple of minutes just for the markets, and I'm going to give Tracy the floor because she's been sort of patient waiting for the guys. Did you ever get abused when you were on the floor, or you were that kind?
Yeah, I was just a trade desk manager, so I wasn't an actual trader. So I kind of was away from the fray at my desk. So
and you were away from the beasts, away from all the beasts, all the Michigas. Great. So let me point it to you because you're obviously an energy specialist, metal specialist. In the prior panel, one of the guys I had on, Austin, had a call on oil to the downside. He thought it was going 60. I'm actually curious, sort of like your view on that. What do you think? Where's 2025 for oil first and foremost?
So, I think ultimately we're going to be range bound for another year again, which is not a bad thing at all.
Right.
There's still plenty of trading opportunities. I do think that I think this level that we're currently at, this $67, let's call it $66.95, is probably not going to hold. I think you'll probably see a swift move to the downside. That said, realistically speaking, if we're talking about shale break evens, they're at $65. So anything below, I know I've seen these wild calls because Trump's going to be in office, drill baby drill, but I don't.
It just takes time,
that's necessarily going to be happening. So
it's not a water faucet. You can't turn it on, right? I mean, even if you said drill baby drill, it's not a water faucet. It's just a lot of
exactly. And so these oil companies still, are focused on shareholder returns. They're not going to make the same mistakes that they did before, the prior two crashes. So, I don't think they're going to make that happen. I don't think we're going to see OPEC necessarily turn on the taps either. So again, I think this level that we're at right now probably won't hold. I'd like, maybe a swift move down to 63. When you start getting below that $65 mark for any length of time, you're going to start seeing production come off the market because they're not making money at 65 a break even. So, low prices are the cure for low prices, right? So I just don't think that it'll hold. But if we're talking about like a near term technical trade, I do feel like, we could easily see that $63 area.
On the geeky side, because I know I have you and I can't let you go. The Exxon field in Guyana, which is just this apparently massive upon massive find. What does that mean short term, long term for the market? I mean, is it like, is it the next nirvana for all of us? Because it's not, it's not the Middle East. It's very, very safe area, and it seems to be a really serious supply. What's the story there?
Yeah, man, I think it's really good. Yeah, there's a serious, what is good about offshore, and I do like offshore because we have right off the west coast of Africa, we have some interesting things happening, as well as off of the east coast of South America.
Yeah, South America, right? Yeah.
So what is good about these offshore projects, well, let me say, what's bad about these offshore projects is they take a very long time to fully come online, 10 years,
Right.
that project. But when it does, and that's all your upfront costs for those wells, because once you start drilling,
Right.
your costs go down significantly, like
Right.
half the price of what shale is. And so, there's good and bad with
Super interesting.
markets.
So when it does come to its full fruition, it could be an incredibly massive source of energy for us, which would be great.
Yeah, it'd be great, and at a much lower cost than, say, shale would be.
Right. Interesting. All right, I'll let you go without. I can't let you go without talking a little bit about gold. What's your view here into 2025? I know you told me privately that you're a buy to dip trade, but just sort of levels. Where do you think you'd be a buyer, and where do you think it has a chance to go to in 2025?
Well, I'm a long-term gold bull. I personally welcome this pullback dramatically. I do not like parabolic markets. They scare me because then you have these mean reversions, right? And so personally, I'd rather see the market go up a couple $100, come back 100, go up a couple, I think it's a much healthier market action, but, I think we could see over 3,000 in 2025. But again, I do welcome this pullback. The reason being that I don't think you're going to see central banks stop buying at any time, because there's still that risk that, what happened to Russia might happen to them, as far as, the Federal Reserve confiscating their money. And that's really when we saw central banks saying, well, we may be friends with them now, but what if we piss them off? They may confiscate our money. So I think you're still going to see a lot of central banks buying. You have an interesting thing, right now in Zimbabwe that's happening, where they have a gold-backed currency right now. We may see other countries try to have a gold-backed currency as well, depending on how this kind of experiment works out for them. So we'll see. I think we're not seeing, it's not like we're seeing CapEx blow out, right? I mean, none of these mining companies they're doing exactly what oil and gas is doing. They're just a little bit behind, where, you're going to start seeing a lot of mergers and acquisitions. They're going to be buying production instead of actually expanding new production. And so I think that sets us up for a very bullish scenario, fundamentally speaking, into 2025.
Cool. And gents, real quickly, because we're running out of time, but I'd love to just know just a quick thought on equities, bonds, Jimmy, 2025. Are we gonna? Is it first 6 months of honeymoon and then we're gonna just dive? What's your vibe on the whole thing?
I think I want to buy this dip here for an end of the year run. I don't think this is really going to fall apart too much. But I'm watching the back of the curve. That's at some pretty hairy levels, kind of standing on a cliff. And we haven't gotten any bounce in the back of the curve, the 10s, 30s. So I am worried if I see that like really come unraveled from here, then I'll back off the dip buys and equities.
What's unraveled in your view? 5? Like at what level are you going to go? Oh, this is going to.
I think if we start selling off from here and start heading back towards our old lows, I think it will get intense really quickly from this point. I don't think we're that far away from all of a sudden, having an issue.
Okay, cool. And Tony, what about you? How are you feeling about 2025? I know you still continue to be buying the dip because the trend is still up. But like, what's your any clouds on the horizon for you, or are you still staying strong and long?
Well, I bought calls in NASDAQ a week out on the close on Friday, just because I'm with Jimmy. I think this every sell off right now, I'll continue to buy dips. I mean, I'm not going to go home long futures into the weekend because I'm not insane. So, I do think that into the end of the year, it's hard for me to see a reason. I go back to news. Is there going to be news? I think majority of the news is behind us. And so you always have the overreaction, then the reaction to that. And then now I think we're kind of stabilizing. I think if there's a sell-off, it probably comes in January, and goes back to what Jimmy said. I agree 100% that we were talking about how Andy was saying, look at the back end of the curve and what's happening there. I mean, even the 2 years up at what is it at 4? What is the 2 year, Jimmy?
413, 425.
Okay, so how is the Russell going to be that trade that's going to continue to go up if the borrowing on the short end of the curve is as high as it still is? I mean, you just don't have a market that tells me it's just going to keep ripping higher. But I also don't see a reason to sell into the end of the year. And I think because this year's been so strong years just don't end flat or just come all the way back. So I like bullish into the end of the year. And I think January could be interesting, especially if bonds stay where they are.
I can't let you guys leave without you sharing your great trick, which is you have this really cool way of opening of the way the price action opens at the beginning of the year can sometimes determine actually direction, at least sometimes for the full year, but definitely for the first quarter. So can you just share with our audience how, if it makes the high and that high doesn't get broken, that's usually high stays around for a while. Could you expound on that a little bit?
I don't have necessarily a complete system that I would go and explain the way I look at it. But I mean, just from doing it, the three of us have been doing this a long time, the four of us, right? And just from watching that, how often do you see years that were really strong just give back a huge part of the year in the last month? I mean, I can honestly say in my career, if I look back, my memory does not really trigger any times where that happened, right? I mean, there maybe has been a couple. I remember there was that one year, I don't even remember which one. It's all kind of a blur. That wasn't 1 week of the week of December where we had that huge sell-off, but didn't it kind of come right back before the new year? Maybe they could shed light on it, but it's that could happen, but it'd be a dip I'd buy.
That's the risk. I love the dip buy here on the Trump victory, growth, all the prospects, but that year that Tony's talking about, that was the year that, Powell was a little he delivered a hawkish hike in December with low liquidity. No one was minding the store. And the market really became unraveled that year in late December. And we're in a similar situation. We have a Fed meeting. We have hot data coming in. And, we could see volatility. That's the only thing standing in the way of this equity market is if the Fed has to pivot in December of all months, and you see what,
we could have a whole show on that one, Jimmy.
I'll leave you guys with a last word because that's fascinating. I want to thank you so much, guys. I could do this for 4 hours with you guys. It's fascinating. Thank you very much, Tracy, Chai Girl. Thank you, Anthony, who's got to do a million different things today that he was telling me. And Jimmy is just going to chill, go to the beach, and probably have the best day of all of us. Thank you, guys. I wish you all the best. Everybody, please follow them. They're amazing, great sources of information and trading. And I want to thank you so much again.